Well, good morning, everybody, and welcome to Friday, June 28th, 2018. I'm Andrew Horowitz from TriggerCharts, and we're going to be talking about markets. We're going to be talking about what's going on with regard to gold. We're going to be talking about the latest economic information. I want to first point you to what you see on your screen, and you should be seeing a disclosure. And of course, just to mention that investing involves substantial risk, and there is no guarantee of future results. This is for educational purposes only. Quickly, do me a favor, folks. Just kick back to me. Make sure you can hear me okay. We've got a brand new camera going on here. How does it look? Pretty good? Looks pretty good on this side. So hopefully you can see me okay. We're going to get on with some of this discussion here today about markets. And of course, you can always go over to TriggerCharts.com. I'll put that in the chat. And you can see not only the information about the indicators that are available, but also you'll be able to see all the replays of this. We'll be recording this. You can find it on our YouTube channel. You can find it on TriggerCharts.com. So there we go. We have a nice group of people that are with us today. As a matter of fact, a pretty good list. It's getting pretty popular, it seems, these Friday morning pre-market rundowns. And with that in mind, let's kind of get into this right here. I want to mention also in the chat, if you could do it, send me over any of the symbols that you have that you want to look at, and we'll be happy to take a look at those as well. So what's going on? I mean, what's happening with the markets, right? You know, we're seeing that this is the best June since, I don't know, 1955, 1938, depending on if you're looking at the Dow Jones Industrial Average, depending on if you're looking at the S&P 500. But nowhere is it said that it's not a good June. And this coming on the heels of a really tough May. It's coming on the heels of a pretty good year altogether. So generally speaking, things are good. We have abbreviated week ahead, and what that means is that the July 4th holiday is falling on Thursday. So therefore, a lot of people aren't going to be playing on Friday, at least playing with the markets. They'll be playing out there on the beach, going in the pool, on their boats, having barbecues. And probably what's going to happen is it's going to turn into a 4-day weekend. One of the interesting things that we're going to see is that there is a rebalance of the Russell indices next Friday on the 5th, is today actually, and then next Friday, so we're going to see some volume there, and then next Friday, we're going to be seeing that there is the official unemployment report coming out, and that could be very interesting. In addition to that, one of the most watched issues right now is clearly the G20 meeting, and that's happening over the weekend. We saw that President Trump has met with already Shinzo Abe from Japan, the Prime Minister of Japan. And that is going to talk about some trade, and we'll see what happens there. But basically, the big issue is when he talks with President Xi Jinping, President Xi on Saturday. I believe it's on Saturday. And the hope is that we'll get some kind of trade deal here, that there's going to be some kind of resolution or a framework. Watch for that word, framework. That's going to be a big issue coming out of this weekend. They're going to hopefully at least have a truce, have some kind of, I don't know, working plan in order to stop the increase in tariffs and also, and more importantly, to try to get a deal done. Markets are looking for this. I mean, between the Fed and their dovish nature right now and the hopes for a trade deal, it does seem pretty likely that there is going to be this opportunity that's going to be happening. So how markets react, we'll have to watch the technicals. The bottom line is we could see that this is going to be a sell the news kind of situation. We've seen that many times before. We're going to watch for that. We've also seen the recent Bitcoin dash, Bitcoin crash, Bitcoin moving back up again. Great example of a blow off top that we're going to talk about today. In eco news, we saw that GDP, the gross domestic product of the United States, right about 3%, right where we expected. The third revision came out this week. Consumer confidence slipped a little bit in some of the reports. Today, we saw that PCE, or the Personal Consumption Expenditure Index, is actually at about a plus 0.2%, showing that for the Fed, because this is one of their most watched series, it is a little hot. So inflation is out there, and we're seeing that there is a bit of inflation. Markets don't seem to care because they think that the Fed pretty much has a 100% chance of a rate cut coming on in July. We have some geopolitical storm approaching. I mean, there is some issues in the Middle East. Obviously, this rhetoric with Iran and the obliteration commentary and the mental retardation commentary and from Iran, and then the back and forth with the United States. And, you know, we're going to go to war with you if you don't, you know, do what we say, and we're going to put economic sanctions on you. And then the reply to that, that we will, you know, wipe you. I mean, crazy, absolute crazy. So what we're seeing right now is that there is this significant amount of geopolitics that are playing into things, not only in the Middle East, but around the world as well, because we are seeing the continuation of what's going on with Mexico. And on top of that, the concern about economic sanctions and an economic geopolitical trade war of some sort that's going on in China. So that's a lot that's happening. And what's really interesting is markets are absorbing it. Take a look at the right side of this chart here. And what we're seeing here is the S&P 500. And when you look at this, what's interesting is that, you know, we did see a lot of concern about this trade war issue in Mexico and all that into June, from May into June. And then this resolution that, hey, the Fed has really got our back, and this nice move higher. This is the SPY daily, the S&P 500 ETF that is representative of the index. And what we're seeing here is clearly there was this zone that we talked about the last few weeks to watch for, probably about 286, and then this move to the upside that was pretty significant. Right now we're seeing a little bit of a consolidation here, probably zoned down to about 289 or so, currently trading at about 292 in the pre-markets, up about 20 basis points or so, or 30 basis points or so in the pre-markets. Y'all with me? Y'all awake? I want to hear from you. Go over to the chat there, and you can put in your comments and let me know what's going on, and making sure that everybody is wide awake here on this Friday. Wakey, wakey. Everybody's getting ready for the holiday. That's what it is. Summertime slog. All right, what else? Next week, we have the ISM manufacturing components coming out, construction spending coming out, the ADP numbers on Wednesday and Friday, the BLS employment report, and that will be important. This BLS employment report is definitely going to be something that is going to be watched very closely by the markets, because we did see a letdown last month. And that letdown last month is being questioned as to whether it's an aberration or sometimes known as a one-off. And what we're seeing right now is that there is the thought that, you know, that was just a kind of a crazy month that was weather related. It's not going to mean anything. It's not going to be out there and really concerning for everybody. So with that, just remember that we have to take a look at that, because that's probably one of the most important areas of economic data that we can find for markets. They react very strongly. And if we get another weak number, you have to wonder and watch, because if you're paying attention to what's happening with the markets, weak numbers are actually beneficial for the markets, because what we're seeing is that there is the additional idea that, hey, you know what? The Fed will cut rates. If we see a blowout number next month, 300,000 jobs added, a 3.6% unemployment rate. That's going to be very interesting, because it's going to be a question whether or not the Fed really is going to do something. If we see 125, 100, that's going to be probably ammunition for the idea for the bulls to say that there is going to be a significant amount of opportunity for the Fed to cut. How much of that is baked into the market right now? A lot. The other thing is, if we see something like a 20,000, then what you're going to see is Fed fund rate future probabilities skyrocket, and looking for maybe 3 cuts. I was at a meeting last week, I guess it was, with Ben Bernanke. We had a luncheon where about 50 or 60 people showed up to this luncheon, and he's even saying that there is a lot more probability that is built into the market that probably should be warranted about the Fed rate cuts. This 50 basis point rate cut that's coming as expected to come on. When is that going to be? That's going to be the July meeting. Well, maybe not so much. Maybe only 25 basis points to get an insurance cut out there and give the markets a little bit of a reason to believe that they're still there. But it doesn't look like there's going to be any major cutting going on, because we do see that, generally speaking, the economic circumstances in the U.S. are pretty solid. I mean, I don't think anybody could disagree with that. The theme for this week: deal or no deal. What's going to be? I mean, I think that there's going to be some kind of fluff and pomp and circumstance talked about into this weekend, and whatever comes out of it is going to be that there's a great meeting, nothing done. That's as I see it. So I think we'll see a pop, and possibly, if there's no real resolution of any significance, other than maybe that China's going to buy soybeans again, or China's going to buy more agriculture, and whether they agree to that or not is a whole different discussion with what comes out of the U.S. delegate. So there's high expectations for the G20. Summer volume we talked about, July 4th is coming. We're going to see volume drop off into the end of the week. And that's going to be very interesting when it comes to the BLS number, the report of jobs on Friday. We have very little volume that's going to really be playing. I usually get a lot more chats from everybody. Is everybody sleeping? Somebody, maybe make sure that the chat is working here. Give me a stock. Give me something that you want to look at. Some of the stocks that you're thinking about and what you want to look at. I don't know what's going on today. Is everybody's kind of just in listen-only mode, it looks like, or something. So you can chat here. I'm going to put chat. There we go. There we go. Now we get a flood. All right, I woke you up. What's going on with Bitcoin? It looks like, we're seeing this, all of a sudden, this incredible FOMO trade come back again. And when we look at that and we see that there is this move from 3,000 or so at the beginning of the year to, I think it went to 14,000 a couple of days ago, down about 12% yesterday, up again today. Let's see if we can see this. BTC, I don't know if you're aware of this, but you can see currencies on, there's about 5 or 6 of them that you can see. There's Bitcoin and cryptocurrency futures, as well as the actual cash. This is the actual cash, Bitcoin USD. So you have LTC USD, BTC USD, BCH USD. Did I miss something? ETH USD. So you get Ethereum, Litecoin, Bitcoin Cash, and Bitcoin. So this is Bitcoin right here. You see that we saw that major blow off top. I mean, look at this. This is beautiful. When you look at this and you see this chart and we see that it was kind of rising and you got these gaps up and then consolidation for a while, and then another gap, and then this major blow off top. That's what a blow off top looks like, by the way, folks. You see this major move up and closes a bit lower, and then you see this rotation down the next day. I would expect for Bitcoin bulls to try to push this back up, probably about, I don't know, 50% of the way back to the 12,000 range, and probably for it to fail, come back down and test over at the sub 10,000 range. We'll see how that plays, but basically that's how Bitcoin plays. It plays on a volume and it plays on FOMO. That's a big issue there. So what else do we got here? Let's clear all our drawings. Let's go back here. All right, make sure we did extend these webinars because they have been so successful. So you'll be getting an email reminder, 9 o'clock on Fridays, right here. Make sure to tell all your friends. Make sure to send them the link to register so they can get on the list as well. So let's take a look. What do we got? Oh, wait, I want to go back. It's not letting me go back. Let's go back here for 1 second. I want to mention we're going to talk about earnings related to Nike, Lennar, KB Homes, and Constellation Brands, and some of these stocks of interest that we have today as well. So let's get right into that. What do we got on here? Let's take a look. Where are the ES right now are up 6.75. The Dow Jones futures up 81, and the NASDAQ futures up 9. A little bit of fair value benefit as well into this. Gold is up again. I mean, gold has been playing very nicely. We talked about that range on the bottom where the breakout potential could happen. Looks like gold may try to test a little bit down lower if we see a good jobs number out. And if there's a concern about the trade deal getting done or on a positive manner, we'll probably see gold back testing down the sub 1400 number, but still in a very elevated sense and pretty good. The dollar, well, dollar's been dropping of late. We do see that coming in very significantly. And let's go down and take a look at some of these other areas of interest. All right, we got some news on Bank of America today, and we got news actually on the entire financial group. Every financial that was put under the stress test by the Fed, miraculously, surprise, passed, except for Credit Suisse. CS didn't do so well with that. So we're looking at Bank of America. Now we see that, these low interest rates and the yield curve that has been tightening and the inverted yield curve is not really good for banks. We can see that banks, if we go back and look at, kind of really take this back to the beginning of the year, we see that banks kind of got that nice pop up to the beginning of the year. And we'll look at this. Let's see if we can click here. And we got that nice pop into the beginning of the year. Sideways action, major sideways action for most of the year. Did try to get a little bit higher in May as we saw that yields were starting to come up a little bit again. But as soon as yields drop, look what happened here. Right now, that Bank of America is trading up in the pre-market, as we are seeing, as a matter of fact, for pretty much all of the financials. Goldman Sachs trading up about 2.5%. They're also going to be allowing them to add to their share buybacks as well as their dividend program. So there's going to be a lot of shareholder value benefit because they did pass this stress test. Credit Suisse, flat on the day. And here's a 30-minute. We saw that gap up a little bit from 11 to 12 yesterday. Credit Suisse, since the beginning of the year, it's pretty much in nowhere land. I mean, we're looking at this, we're seeing that there is pretty much, I mean, this consolidation that goes across here from about the 1150 to the 13 level. Pretty good overall range, but really if you break it down, the consolidation is inside this box right here. What we want to do is, and when you're looking at this, this is on your screen that you're seeing the TriggerCharts Commander Series, and basically the top part of the screen. And maybe I'll make that a little bit bigger here, if I can. Let's get back over to the mouse and kind of make it bigger here. So let me just say one thing. On the top here, on the top part here, you're seeing the radar screen. It gives you multi-time frames. This is very important. Multi-time frames for each stock or symbol or currency or future from left to right, looking at 30 days in this particular circumstance. Kind of go to the top here, I'll show you. You got 30 days, you got 60 days, 240, daily, and weekly. And it gives you what the trend is and the overall trade bias. So we're seeing here, for example, on the first one, ES is showing for a long profit. There's been a weekly long that's been on for some time. Now it's looking for a long profit. There's no trade bias on any of these. Right now we're in a consolidation point for the ES or the S&P futures, and that's showing up very clearly here. So you know, really there's not a lot of trading opportunity on any of these time frames. What you really want to do is you want to look at this from right to left. You want to start over on the weekly and say, hey, you know, what's the long-term trade bias here? What are we looking at on a long term? So I can see, for example, on gold, we have 4 weeks, it's long. That gives me an idea that we're going to probably try to trade on the long side more so than the short side. Short opportunities will present themselves, but we probably have to be pretty nimble in moving in and moving out. It's not a long-term holding position. As you can see right now on the gold, there's a 60-minute short alert that has popped up. So depending on where you are as a trader, if you're a swing trader, you're an intraday trader, you're a scalp trader, or your long-term hold, what you see here is, and you see them changing as the tick is moving along, what you really want to look at is what the longer term is and the shorter. This idea that we always talk about is look from right to left or look left. That's an interesting point. We talk about that, you know, always look left, look left, look left, look left on the chart, look left. So what we see is if in fact, and this is a good example right here on the Credit Suisse chart, if we can get above about 13, I would say 75 here, you know, which is kind of this level right here, look left. Look, there's really nothing in this range. There's nothing that really is very significant in terms of any area that we're seeing. You know, you look at this whole range above here, very light lines, very simple to look at. Just look for the lines. Are there lines in here? Are there areas that are holes? And if there are, there's an opportunity for a major move quickly through time, both on the upside and downside. You can see very clearly that when we look at over here, and we look at where there was some support up to about this level, about 15, there was nothing left over here. We could probably spread this out and see it a little bit better. And that's why you saw this major and very quick move all the way down, and then a consolidation for a while, and then again, nothing left, nothing over here. And then we saw that big drop right there. So you got to look for where there is where there are these hole areas, these areas that are indicating that we can have a fast move, especially for swing traders, especially for very active traders. So moving along, what do we have? Kind of going down back where we were. Mentioned CS. Lennar came out with earnings. It looked pretty good. Unfortunately, they had some guidance that was pretty soft. You'll notice that if we kind of draw a line right here, if we take where are they and look for this, and we just simply draw a line from this area, you know, we can see there's a variety of support levels to the left that we're connecting. So that's interesting. So let's kind of zoom that out a little bit. And we can see, yeah, there's a lot of decent support when we look. Oh, that line's not working there. We'll just draw this line. Really good support moving left. So let's draw that line in one more time on this because the chart moved and the line didn't move. You can see, hey, that was a good support point. Now, if they break below that, what's going to happen? I'm asking you, chat to me. What's going to happen if it breaks below this 47.87 line, something around there, to the stock? Do you see and don't notice where there is actually a line of nothingness right here? So now what we have is support down to about the 45 level, right? So that's an important area that you want to look at. If it can hold this area, in terms of a bounce candidate right here, because it is supportive along this really good level, then you could see it move up. However, what else do we see? Well, there's some resistance on here. Again, drawing a quick line here. Got a resistance level. When we look left, look at all these lines when I just simply draw it across, how many connect. That's showing us that traders are placing their bets at those levels because this is showing us volume and price. It's an algorithm that we developed to show us it's very powerful. Very powerful. By the way, I'll mention at this point, you can get a 10-day free trial over at the TradeStation trading app store. If you have TradeStation, which you should, and you're using, this is 9.5. Next week, we're going to upgrade to version 10, crossing our fingers. But we did develop this for version 10 as well. It looks magnificent on version 10 for TradeStation. 10-day free trial for this. On the bottom, what you're seeing here, when you look at this area on the bottom, and we're showing you the aileron. You see that? That's another plugin that we have, and that's a momentum trade. You can see the momentum turned very significantly down on this. And right now, you may have a little bit of a setup, but we still don't have a new altimeter drawn here, and that is a problem. When we see a brand new altimeter drawn and I see something like this, that could be an interesting trade to get into, but right now, nothing great. KB Homes had the opposite situation. They were coming in after the Lennar numbers, and then they bounced up nicely. Uber finally over their IPO price. Now look at this. You can't really, we don't have a lot that's going because we need a number of more days on a daily basis to really give us the opportunity to look at this. But on a short-term basis, we saw there was a breakup. Right now, we got to get above this, you get above this 45.50 number. It could be really interesting. Jill, disaster area, very volatile, very big problems. Stock kind of ramps up, ramps down. Saw a nice move the other day. This is not the right symbol. There we go, this symbol. That's not good. It looks, this one would be better. Very volatile stock. You can see the big ramping and the moves that it sees, these big moves down, these big moves up. And we did see that. Here's something interesting. So we saw the stock get absolutely obliterated from about $4, this is a retail stock, down to about the area of, $1.50 or so, right? But look at this, kind of sat there. Momentum, this is really cool. Momentum started shifting on the aileron. When you see that, you can say, hey, maybe there's an opportunity to buy. We see good support that's going on here, even though it's a pretty aggressive play, a very cheap stock. But I mean, we saw a move from $1.50 up to $2. Now, with that, I'm going to zoom in on this. I want to show you something. When we look at this and we zoom in, really interesting. We got really good support. One of the things that I find here that you may be looking at and say, hey, look at over here. Look at over here. You see the red line? You see the blue line? See the green line? Everybody sees that, right? Okay. We got a red line. And hey, wait a minute. Where's the green line? Well, if you hover over this, you'll notice on the bottom, it shows that the green line on the bottom, the cruise and the stall, the support and the high volume note are both the same. That number is the same. You see $1.52. That means there's double support at that level. And as we held that very nicely, once it started moving up, there was a short squeeze that went on. How much longer are shorts going to hold on to this position? So they're looking at this as an opportunity to actually get into the position here. So I think that was pretty interesting. Nice move on that. A couple more things here. Let's zoom back out. You can use your up and down arrows, by the way, as a shortcut to move up and down. Bitcoin. So this is the Bitcoin Grayscale Bitcoin ETF tracker. Pretty much tracks Bitcoin to a degree. Went from 6 to about 16 recently. Obviously, it was a lot higher at one point. I think it was some ridiculous level. I mean, we look like, it was. Yeah, look at that. It was 35 at one point. That's after some splits, I think, also. You have some support down here if you want to trade this to about the 1258. Right now, trading a little bit higher. Again, along with Bitcoin, which looks pretty much the same. But you could use our analysis and indicators on this as well for that. One more I want to mention, AAOI, Applied Optoelectronics, started moving up. You have to get above this. Look at this. Here's the magic. Here's the magic. Let's draw this line here. Always use these line tools that you can. There's plenty of these over in TradeStation. Look at this. Well, a little bit lower I should have gone. But basically, yeah, let's see if I can do it. There we go. That's where it stopped. That's where resistance is. So it's very easy to see this because what we're doing is combining the whole idea of simply using volume and price and then using market profiles to map out exactly where these areas are. So you can see like right here, there was a pretty significant level of support that was breached, and that was all bets were off. The short was called, red is a short, and there you go. All right, let's see. Any other stocks you want to look at? We got BIIB. Yeah, Biogen. Biogen's interesting here. You got the same situation here. So what do we see here? Can chat back to me for a second. Again, I'm showing you daily as examples. You can look at 30 minutes, 60 minutes. You can look at 10 minutes, whatever you want to look at. But look at this Biogen stock. What are we seeing? Well, it's in the doghouse. Went from 330 down to about 220 or so. But here we got the aileron. Again, this is in addition to the Commander series that you see. The whole top part is the Commander series along with the radar screen. But we're seeing that there is a much better upside going on here. Now, what do we have to do? Well, two things. Let's go look at this. Okay, let's look at this very carefully. First of all, let's look at what we have. We have a hole across this area here, up to about 290. We got to get above that. Now, that's first. What else do we got? Well, we have resistance, right? We see resistance right here, right where it's been resisted. If we get a short squeeze on this, I could definitely see this moving back up right off this top line to right about a little bit lower than that. Again, about 300 level. So pretty cool stuff here. I'll mention again, we're going to have this recorded. You can get all of the trigger charts. And by the way, anybody that is a subscriber to the Trigger Charts Commander series will get a 4-hour free online coaching that you can do at your own leisure. It's there, so make sure to do that. Email us and tell us at info@triggercharts.com that you actually subscribe to it. We'll check it out, and we'll send you the links in order to get your 4-hour training. It's $199 value. People buy it for $199, but I'm telling you that if you want to subscribe and you want to do it, you'll get it for free. So go over to Trigger Charts, and check it out. Go over to TradeStation and the Trading App Store. Market is open. Go to the Trading App Store, and you can subscribe to it. There we go. You can subscribe to it, and we'll give you that training course. We'll be here next week as well. I want to thank everybody for joining me, and I'll see you then.